Hello and welcome to the latest episode of No Accounting for Taste with me, Matthew Ward, and the familiar voices of Accounting Web's managing editor, Richard Hattersley.
Hello.
And technology editor, Tom Herbert.
Hi, Matt. Hi, everyone.
Now, listeners, humour us for a moment if you could, because I want to start with award-winning news. Richard, it's been a fab few weeks for the Finance, Accounting and Bookkeeping Show. Tell us more.
Absolutely. Yes, I am proud to say that we now are owners of a handful of awards. How exciting. So the Finance, Accounting and Bookkeeping Show was named Trade Show of the Year for a certain size category at the AEO Awards, at the AEO Excellence Awards, and we were also named Best Event of the Year at the Conference and Events Awards as well, which really is an amazing thing to be there also to pick up the awards. But it's been an absolute great recognition of just the hard work that everyone in here, Accounting Web Towers, have put in, but more so as a reflection of our audience as well. And in order for us, it kind of shows that what we're doing is really working for our audience and providing the place for them to come and meet the vendors, get the information from excellent content sessions, and of course meet us, the wonderful people at Accounting Web. I must add, that wasn't put in the award entry, but we all know in our hearts that's one of the main reasons why these shows were such a success. But yeah, a real great recognition of everything we're doing. And yeah, March 2027, come along and be there to see why the Finance, Accounting and Bookkeeping Show is an award-winning show. We've got all from networking to roundtables to opportunities to get those one-to-one conversations with vendors out there, so you can actually understand what's in a demo, what they're actually providing, rather than promises to speak like in 2 weeks' time once the event's over. So great. We were doing some great stuff there, and the awards really is some wonderful recognition of that.
It is indeed. I'm not going to make any more predictions on this show, but it feels like it's going to get bigger and better in 2027 and beyond as well, Tom.
Yeah, and I think it's very easy to be cynical about awards. I mean, we host our own, right? The Accounting Excellence Awards, and we actually, in my view, to our detriment, I think we work far too hard on the judging, personally, making sure that, actually fair play is observed, and that, we're not just sticking people into categories who don't deserve to be there. But I think actually, when people have worked tremendously hard, I mean, our events team, our marketing team, the people who actually are there building the show, have done an absolutely stellar job from, a standing start a few years ago. We weren't really an events company. It was a purely digital publication, and so to do that from a standing start and to get what we've got is incredible. But you have to say, in terms of the person writing the entry, it definitely deserves credit, doesn't he, Richard?
I completely agree with that, Tom. I completely agree.
It is a genuine art form, I think. Like, obviously, having been on the other side of it, like, judging the Accounting Excellence Awards for whatever it is, 10 or 11 years now, like, there is an art form. It's hard. It's a sort of a sprinkling of statistics, a nice coherent narrative, a little bit of, je ne sais quoi. Like, it's there isn't really a formula to it. You just sort of know one when you see it, almost. And so actually it is, it's all credit to you, Richard, for wonderful award entries. Yeah.
Well, producer Molly, make sure that remains in the edit, for one. And I will, like the Colonel, no one will know the secret sauce. No one will know the secret recipe. It's going to be hidden away in the AWeb files for forevermore.
Rightly so, rightly so. And so long as you remember it next time around, Richard, because like you said, Tom, as we know, it's very easy to get these things wrong. So yeah, to have done so well, our first stab at it, yeah, really, really, really good. It's great news. It's great news.
Just stuck it through ChatGPT, like some of the entries to the AE Awards this year.
There's always some, isn't there? There's always some. Well, roll on Fab 2027. But in the meantime, Tom, you've got something of a triple threat for us this week.
Indeed. Well, regular listeners will know that I only really talk about two topics these days, either AI or MTD. But it's AI, MTD, and the tax gap this week. So that is exciting. Now, the tax gap is this kind of notional concept that HMRC has between the tax owed by individuals and businesses and the tax that's actually been paid. They release a little document pack every year containing the sort of tax gap, and it's generally a nice sort of something for the nationals to just sort of turn around rather than actually scrutinize or analyze in any great detail. It's quite notional. It's a really difficult statistic to actually get right. I mean, again, regular listeners will know my opinion on economists. No better than witch doctors, in my opinion. But the tax gap kind of falls a little bit into that, really. But we're taking it seriously today because actually HMRC estimates the gap between the amount of tax owed and tax paid at 6.4%. That is a record high £59.2 billion black hole. Apparently small businesses account for 62% of that shortfall, and the majority of that is a sort of failure to take due care and attention with your records. This is obviously bad news, but help is at hand for those Whitehall cash collectors, because Making Tax Digital for income tax has been brought in to solve this very problem. So last year, Financial Secretary to the Treasury, Lord Livermore, told Parliament that MTD is going to bring in an extra 1.95 billion in tax revenue by 2029-30. Or is it? Because I think one thing, a story that's been sort of bubbling for the last couple of weeks has been around Lucy Cohen. If you haven't heard of Lucy, she is the co-founder, co-owner, owner, I guess, of Mazuma, the Bridgend-based firm who were one of the first to offer a sort of subscription service back in the day. That's quite popular now. She's president of the AAT and on quite a lot of these sort of advisory boards as a regular in the Treasury, that kind of thing. Anyway, if she wasn't busy enough, she's actually doing a doctorate now. And so she'd taken 20 years of data from Mazuma and cross-matched that against HMRC's assumptions for Making Tax Digital, and actually found that Making Tax Digital, in her view, was going to add between 670 million to 800 million to the tax gap rather than narrowing it.
It's a lot of money, Tom. It's a hell of a lot of money. Why has that happened?
Yeah, I think a lot of it seems to be down to a sort of new breed of software. So sort of artificial intelligence creeping in to software. Making Tax Digital obviously has there's been a bit of a software feeding frenzy around Making Tax Digital because HMRC isn't building any software for it, just third-party software that's going to plug in to HMRC's back end, as it were. And so, I think some of that is obviously a decent, long-standing software. Some of it, maybe not so much, and it is an unregulated market. And the final thing in this particular heady cocktail is around commercial incentives for banks to embed basic accounting and filing tools into their product. So rather than having your bank and your accounting software sort of hooked up via a bank feed or import, export, whatever you want to do, the ledger's actually sitting there in your banking software, and you are able to categorize and sort of make filings from your bank account, which, as I said, I think is it's one of those where, I think with the banking, that like, there was a sort of lack of oversight. Sometimes a lot of these sort of banking and accounting tools don't have accountant portals, which obviously isn't great. You're not able to sort of see what your client's up to in any meaningful way unless they're sort of exporting and sending stuff over to you. Then there's a lot of hacking about, and a lot of these are sort of marketing a fairly simplistic message. So yeah, but I think as I mentioned, the main reason was around this AI miscategorization, and I mean, she called it stochastic contamination, which I'm pleased I've managed to pronounce first time. But I think it was essentially what that boils down to is a sort of looking at an AI system can allocate a transaction to a plausible tax category without producing the kind of reasoning trail an accountant, bookkeeper, or whatever can probably properly test. So I think in her view, a human mistake can be messy, but it's usually traceable. Whereas the sort of machine generated misclassifications, they can look great, they can be neat and consistent, but they can also be completely wrong. And those errors over time, the AI is constantly sort of feeding back and training itself. Those errors can really compound. She called it deep fake accounting almost. And so, it is, I think that difference between, I've talked a little bit about this on the show before, the sort of deterministic nature of the old school softwares, your calculators, Excel, sort of accounting engines where, 1+1 always equals 2, whereas with the probabilistic, the large language models that are being plugged in, they actually probably will answer slightly differently every time. Sometimes not very, very much, but it's different nonetheless. So and the fact that a lot of this stuff will be miscategorized, will it be miscategorized in HMRC's favor? It's hard to say. I think, but based on Lucy's data, where I think she looks at this 20 years worth of structured small business client data, even when individuals or businesses are using a qualified service, about 18% of that transactional data is either missing or faulty. So, if trained practitioners are struggling to filter out those anomalies, when AI comes into the picture, the risk to unrepresented taxpayers is pretty terrifying. Yeah, I think one point that she made, that actually underreporting among limited companies, they're obviously not subject to MTD for income tax, but that sort of underreporting has risen by more than 50% due to the onset of AI tools in their daily bookkeeping systems. So I think all in all, in her view, when I spoke to her, she said it's likely MTD for income tax might well be past its sell-by date before it launches.
Does any of this, Tom, the AI miscategorization, the new software struggling, the commercial incentives, does any of it surprise you?
I think what she's done really well is to sort of pull in a bunch of different threads that were all out there. So I think individually, not really, but when you put the whole picture together, it is, yes, that does kind of make sense. Obviously, like, we don't know, like, this is looking at 20 years worth of data. We don't know what's going to happen in the future, but I think, like, looking at, like, it kind of is up to the accountants. They've been doing a lot of the training and the outreach for MTD anyway. The legitimate software providers who seem to be doing the rest. it really is up to them to try and make sure this data is validated.
So what happens next? Where do we go from here?
Yeah, I think we just have to watch it play out, to be perfectly honest. It's very doubtful MTD is going to be pulled now. It's been 11 years in the making. They've spent more than £1 billion on it. It's likely we'll have a change of chancellor fairly soon. So you never know, but I think it would just be too much. We've had successive administrations backing MTD, and so I've tried my best to contact the Treasury about this over the last month or so, and I've just received a complete wall of silence. So it's who knows? Who knows where we'll go next?
Wonderful. Well, thanks as ever for the insight, Tom. Another chapter in the MTD tale that we will, of course, be keeping a close eye on. And we go from one government policy to another, or perhaps many more, Richard, as we've had it all happening at number 10 Downing Street recently. The Prime Minister has, of course, resigned, and Andy Burnham, with his northern charm, looks set to get the keys. But with that, of course, comes some tax uncertainty.
Of course, yes. I start my section with some breaking news. Yes, the Prime Minister has resigned. Oh, sorry, but maybe two weeks too late on that one. Come to account web for the breaking news on what's happening at Westminster. As we all know, Keir Starmer has resigned, and that kind of essentially completely rewrites the script for what's going to be happening in terms of the economy, in terms of tax. And the conversation has now somewhat shifted away from what will Rachel Reeves do in the next budget to who will be the next chancellor at the next budget and what on earth do they have planned. So I guess before we get into the likelihood of Burnham's premiership and what his tax plans may be, it's probably worth just spending a short moment to talk about what went wrong with Starmer. And obviously the downfall of Starmer's premiership can be pointed at a number of different things. We're very much focused on tax front here at AccountWeb, obviously, so that's where all of our attention is going to go. And I think often with a lot of the cases when it comes to a government falling out of favour with the general public, often it does come down to tax and the economy. And certainly when it comes down to Starmer, him and the Chancellor Rachel Reeves have really been in lockstep throughout the whole premiership so far. And a lot of the decisions made have somewhat stuck around and been difficult for the Prime Minister to shake off and the Chancellor to shake off. In the conversations I often have with many of our readers, the one thing that always tends to come up is the employer national insurance increase. That's the one measure which was announced in the Chancellor's first budget, and one which has not been U-turned on, and it is still causing very much a squeeze on small businesses. And that's the message which accountants are off whenever I speak to them is one message that I'm hearing loud and clear is around that one. There's been other tax policy announcements over the past couple of years which haven't really cut through favourably for the current administration. Those being the inheritance tax changes for farmers that obviously had it was slightly watered down by the point that it has gone through, but up until that point, the headlines about that had been particularly toxic, and I don't think it had done the government any particular favours. And the national minimum wage increase as well is another one which certainly we've heard on from our readers, that being another particular pinch point for their clients. Now, I remember back in March at the Finance Accountant Bookkeeping Show, Rebecca Bennyworth spent a considerable amount of time of her day 2 keynote talking about the pressures that the two changes of the minimum wage increase alongside the employer national insurance increase the pressures that they have put on her clients in particular, and gave a number of examples from like a cafe owner who, like a real small cafe, and they were struggling due to these increases, and there was even talk that they potentially could be looking at closing the establishment because the costs were just too high for this small business. And I think Rebecca Bennyworth, the quote which I remember writing for the piece, said that it was the worst budget that she'd remembered in a number of years, because it felt like there was no real spine around it where all these policies were kind of coming from. There was no real vision. It just felt like the government was scrambling down the back of a sofa trying to find loose change. And that's how they kind of arrived at these tax policy announcements. And that's kind of been somewhat the problem. And I think that idea of vision for the government we keep coming back to that one. And it kind of all started, and we've spoke about this at length throughout on a number of podcast episodes, about how the government somewhat snookered themselves to begin with by having the in the manifesto that they wouldn't increase national insurance, wouldn't increase income tax, and wouldn't increase VAT. And from that point, I think the downfall of the government was somewhat set, because before they'd even started, they'd handcuffed themselves. So all of these have kind of created this storm for the Prime Minister and the Chancellor. And as we'd seen over the past couple of weeks, their position became untenable. And here we are. We're looking at a new Prime Minister in the next few weeks.
And you'd think it would happen every time in a way, but for whoever does come in next, they've got this 2-year run of how not to do it. There's probably quite a lot of lessons to take from what's happened over the past couple of years, and which taxes to avoid and which policies to avoid. Do you think whoever comes in next will be able to actually take some lessons from what's happened over the past couple of years?
Well, we know that that Burnham is a skilled communicator. There's always been something which everyone's always said about him, and I know that's been something coming from his tenure as the mayor of Manchester is something which I think has been one of the strongest points which people have said when reflecting about his time in that position. The big decision for him, though, is his choice of Chancellor. That's going to define the next few years for him. Looking at the Westminster Whispers, there seems to be 3 names that keep coming up. Obviously, there's going to be other names which may be in conversation, but the ones which keep coming up, of course, are Ed Miliband, Shabana Mahmood, and Wes Streeting, who originally put himself up for leadership contest up until about 30 minutes after Starmer resigned, and Burnham's rollicking victory in the by-election. So those are the current names which keep coming up. Obviously, there's other names. One name of obviously which isn't in the mix is Rachel Reeves, who seems to be probably like the Prime Minister, already putting her belongings in cardboard boxes and organising dates for the move-in people. So whilst we don't know anything precisely about what tax changes Burnham has in mind, there's been whispers and talks, as we all would expect, about what could potentially happen. For example, Wes Streeting had already talked about the idea of a wealth tax, which, as he said, quote, that works. And this wealth tax would equalise capital gains with income tax. Depending on how that comes about, this kind of feels similar to something which Dan Needle proposed back in 2022. He spoke to Accounting Web's then tax editor Rebecca Cave about this, about how kind of equalising capital gains and income tax would raise a considerable amount. I think back then it was £8 billion, I think was the figure suggested. But I think when Streeting has since talked about it, I think that figure seems slightly more at this point. So that is one option. We'd also, there's been talk about a property tax where he'd essentially replaced council tax with stamp duty, and stamp duty with a new annual levy. Burnham's also previously spoken about about funding the National Care Service, and I think there'd been suggestions of a care levy of 10% payable on everyone's asset savings and homes. So that was something in the past, but nothing that's obviously come up recently. And I remember when he had his appearance on Question Time in the run up to the by-election, and he hinted then that about increasing the personal allowance threshold. As we know, personal allowance has been frozen at £12,570 since April 2021. So it's been at that threshold for a considerable number of years. And he did do the Burnham wink and nod at an audience member who raised that as a potential pain point for them. But Burnham has also said he's committed to the Labour manifesto, because obviously a change in Prime Minister, he has to kind of have some form of keeping things moving on and committing to that manifesto, because there's that commitment to that as a government. So he's committed to still sticking with not increasing income tax, VAT, or national insurance. So he still has that part. So he's still somewhat snookered like Starmer and Reeves were. But what we do know, whilst all that is of course obviously whispers and rumours and suggestions, we do know that devolution will play a big part of Burnham's premiership. And he also talked about business rates being potentially cut for pubs and hospitalities, being potentially one area that we could expect. So there's still very much things up in the air, but devolution does seem like a main one. And he's obviously talked about number 10 North. So there's an awful lot happening there that we've got a kind of a direction of where things may go. It would be kind of useful on this podcast if we did have a northern correspondent who could help us southerners kind of navigate what we could expect.
Yeah, maybe one that's been living in Manchester for a bit.
Yeah, who perhaps maybe even lived under the mayorship of Andy Burnham. Anyone on the call, Matt?
Well, I was getting ready to sound the northern alarm, which is just me screaming Greggs at the top of my lungs. Yeah, I mean, you're right, I was in Manchester from 2013 to 2023, I believe, so 10 years. And it did change a lot. There's a lot of hyperbole around what's happened in Greater Manchester with Andy Burnham at the helm, but things improved significantly. It just felt like a much better place, and it was as I left it. It was almost like I was leaving it in a better state. You know, the impact I had on my 10 years there, but it was nothing to do with me. But you could just feel it. The city was buzzing. I've been back a couple of times, and it remains in a really good place. Just a completely different environment. People seemed happier. There was all sorts of things going up. The skyline looked completely different when I left, and not just going up for vanity's sake. It seemed like, you know, these were places that were thriving, busy. People wanted to move there. People wanted to live there. It just had a real something about it. And credit to him. He's done a stunning job. A lot of the stuff he's said so far has obviously been about the North and the role it's going to play. I fear we haven't had as much substance as we perhaps would have liked so far. You know, the stuff around the North is great, and it may very well galvanise a lot of people and get a lot of people on his side, but I feel like we just need a bit more about what he's going to do, what actually comes next. The Northern stuff, sure, good on you, but give us the details, give us the juicy stuff. So it remains to be seen, but he's certainly coming from a position of having had a huge impact on a very positive change.
Although now, knowing the time that you spent there, Matt, I'm kind of attributing a lot of this success to you, if I'm honest.
I'm glad someone said it. I didn't want to take full credit, but me and Burnham, whether I become the next Chancellor, who knows? But clearly it's a double act that gets the job done.
Absolutely.
It's a great tagline, isn't it? It's a really good tagline. You said at the start of that, Richard, that some of the stuff that was in the manifesto rightly snookered the Labour Party, and it's interesting that he's going to continue with that same stuff. So do we think that in a couple of years' time he may find himself backed into that exact same corner? Is there kind of any way around that so far as sticking with not increasing those various taxes goes?
I mean, look, we talked about the tax gap at the beginning of the show. Maybe there might be something there that Burnham could play with. There's if the figures are to be believed, and the amount of money that there is, amount of tax which has been uncollected, then who knows? There's definitely something there that he could look at, depending on his popularity as well. Because if things get a little bit, if he starts feeling that things get a bit tough, but the popularity is there, then maybe that might be time for a snap election for him to change the narrative and change and then put his fingerprints on the direction of tax policy in the country. But he does have a mountain to climb in terms of how he gets around all of these, around the blockers of having these three main taxes already removed before he starts. And as we know from Rachel Reeves' time in number 11, that just means a lot of creative thinking from the Treasury and tinkering around with those smaller taxes, which leads just to further complication.
What does all this mean for accountants then? There's a lot of unsures, a lot of assumptions, a lot of maybes. What actually happens there? What do the next few months look like for them?
I think I just from my perspective, I mean, the devolution agenda, I think, has some accountants wincing slightly. You know, we obviously have a couple of extra bands of income tax in Scotland, for example. There's a few extra taxes in Wales, but like the idea, you know, we had Rishi Sunak's mad Freeport idea, didn't we? That was sort of going round and just seems to have died a bit of a death now. All these additional grants and cuts and you know, sort of localized subsidies and things like that. You know, great opportunities for your sharp-elbowed businesses or whatever to sort of get themselves in there, but you know, their advisors are the ones who are going to have to be left dealing with it. I mean, I don't know. I feel more generally like yeah, it is a real shame that you have these manifesto commitments around you know, the income tax and VAT. Personally, I think there probably needs to be a wider national conversation around, you know, whether we adopt, you know, do we want to be a Northern European country and have sort of higher rates of income tax and a nicer lifestyle, or do we want to go a more American route and sort of, you know, cut these and be slightly more divided? I think, you know, accountants tend to be in the higher bracket of those. You know, they'd probably happily argue for less tax. You know, the tax complexity sort of keeps them gainfully employed. But I mean, from my perspective, I think the best thing to do is to bring back the Office for Tax Simplification and actually listen to them.
Any thoughts from your good self, Richard?
Absolutely. I think that's a grand idea what Tom suggested there. As we all know, the Office of Tax Simplification had some incredible brains of tax sitting around the table, and if you have those people at your disposal willing to help and willing to try and untangle a complicated system, the first thing you probably should do is listen to them and enact on some of their suggestions rather than keep them at very arm's length. So I think that would be a splendid idea. And look, kind of Tom nailed it right there about the issues for any political party coming in. I think it's the classic case of any government coming in always plays the cards of, I'm not going to increase your tax, but I'm going to increase someone else's tax. And I think that always gets someone into power. But then when the political reality is something completely different. What I say, though, Tom, is perhaps something like a help to grow digital funding may also help whoever comes in next. What do you say about that?
That was tremendous. The Help to Grow Digital scheme really was quite a special. I mean, short lived, and tiny fraction of the budget of making tax digital. In terms of its ineptness, was a staggering piece of creativity from the Whitehall Mandarins, who, still, I think, teaching them actually what a small business is. Like not just your definition of it, but actually what a small business entails. Who runs it and how they operate. I think would be a brilliant start.
Mm-hmm.
Lovely stuff. Well, thanks as ever for the insight, both of you. We will, of course, be following the journey of whoever gets the keys, brackets, Andy Burnham. I want to see us out with a look at one of the newer challenges that FDs and CFOs are finding themselves coming up against in this digital world, that being making the most of time after automating tasks. Now, automation, it isn't new to finance leaders. I've had a lot of chats with them recently where they've been keen to stress it's not a new thing. What it is doing, though, is it's affecting the role quite differently. Where it was once the likes of payroll processing and accounts payable, it's increasingly concerning the responsibilities that require more of a human touch. Your forecasting, your drafting reports, identifying risks, for example. So they're finding themselves with pockets of time here and there, and at a time where there's more of an expectation for the finance leader to provide value for the business, it sounds perfect, and you might think, well, where's the challenge? The answer is filling that time with the right work. It can be all too easy to fall back into old habits and fill that time with meetings or admin, but the real value is spending it getting to know the business and where you can make a genuine difference. I spoke to fractional CFO and fab speaker, friend of the site, Dejan Greenaway-Delaney, about this, and she said sometimes alignment is a simple, overlooked benefit of having that time. Is everybody working towards the same goal here, she asked? Does marketing and sales have the same targets and the same focus and the same timeline? Is the product team or the development team building something that sales is gearing up to sell? Are they building it because there's an issue to fix? She spoke of seeing some really big divides on projects and this being a prime opportunity to marry all of that up. And this is the good side of tech, Tom. Some finance leaders will understandably be a little nervous about using it or concerned about the implications, but it can do plenty of good if used in the right way.
I think so, yeah. And I think with deployed by people who know the business, who've walked the shop floor, and deployed sensibly and in the right way, rather than the sort of magpie-esque sort of shiny button syndrome that people have. Yeah, absolutely. And it's been great to see, as I say, you mentioned sort of AP automation and things like that as a prime example of, stuff that I used to do, 25, 30 years ago with, just literally just spending all day doing the soul destroying job of just data entry, entering data from a paper invoice into a system. You're not really learning anything from that. And so, actually you feel like, getting people further on in their careers more quickly as well.
Well, while there are plenty of things to do with that time, there are naturally a handful of don'ts. Dejan recognised that it can be easy to get lost in vanity projects as a finance leader, adding that there's a want to have the perfect-looking finance department. However, she said the important thing is to move the needle where it's needed most. It's things that are more optical, she said, and actually delivering something that's more of a business need than on your finance leader wish list. But before getting to that point, there needs to be an overcoming of trust of sorts. Dejan wondered, is it that you don't trust it or you don't know it? And she said there's tentacles everywhere, which is quite the visual. And it therefore does make AI governance as a finance leader painful and time-consuming, but also very, very necessary. That being because, Richard, it's only going to get more and more relevant. I know you're a big Claude fan. Almost hard to imagine life without these things these days, isn't it? It's going to be there. You're on mute.
Yes, I completely agree, Matt. It's been over the past few weeks, we speak to a number of people across the accounting profession, from bookkeepers to small firms to mid-tier and large firms to finance leaders. And it feels like AI is that one topic that comes up, and each of them kind of approaching it in a slightly different way. But it does feel as if the tidal wave of AI tools have just sloshed into the profession, and a lot of people are just playing catch up, or feeling like they have to do something with it and creating a problem to use these tools. And that could be very much the case for some finance departments once they get let loose with these tools, trying to find a problem to fix, and then suddenly something has become far too complicated again, or they're just not using it in a proper way with governance. I think that's a problem which many people are going to be grappling with over the next few years, is just the governance of these tools and understanding exactly why they're using these tools, rather than getting the shiny new product syndrome and just using it because everyone else is using it without any real vision as to why they are using it. So, yeah, the tentacles of these tools are everywhere. You just have to make sure the tentacles don't get out of control.
Wonderful. Again, a stunning visual and a brilliant use of the word sloshed as well. We don't get enough of that on the podcast. That's all we've got time for this week. Join us next time for a look at all the big goings on. But until then, take care.